Hello, I'm Paul Bartholomew, Associate Director of Ferrous Metals Research, and I'm in Sydney today, where I've been attending and participating in our annual S&P Global Energy Market Briefing event, which is where we bring lots of sort of colleagues into town from different offices, and we cover the sort of full range of commodities that S&P looks at. Of course, I'm sort of focused primarily on metals, but within metals, we looked at the ferrous area, copper, lithium, battery metals, and we had plenty of kind of interest and plenty of questions. So I think that's always a good way of kind of getting an idea of, what people are interested in is, what questions do they ask at the end. So, we looked at copper, the situation with copper and ongoing supply. One interesting fact I heard one of my colleagues present today was that only 2 out of the 10 top copper producing mines was actually developed in the last 40 years. So I think it just really illustrates, the challenge of bringing on these huge new projects, particularly when there's periods of lower kind of grassroots investment and exploration budgets. So that's probably going to kind of cause a bit of a supply crunch in the years ahead, in an area that is so incredibly important for many things, especially energy transition. In the case of lithium, we've seen lithium prices rally. There's now some talk that perhaps some of those lithium mines, including some in Australia that were put on care and maintenance because the margins just weren't there. There's talk that those might come back online now, within the next year or two. But presuming that those lithium prices stay strong. Kind of in the area I look more closely at, I guess one big area of interest is the Simandou iron ore mine in Guinea, in West Africa, which is, after all of these many years of speculation and millions of articles, has finally started exporting. So it's done a couple of million tons already this year, and we think it could do at least 15 million tons in 2026. What impact is that possibly going to have on iron ore prices with all that new supply coming out of Africa? Otherwise, we had questions around coal. To what extent, is Indian demand going to drive metallurgical coal demand and prices in years to come? We think perhaps by the end of this decade, or perhaps early the next decade, Indian coking coal demand could grow by as much as 30%. So, lots of very interesting facts and lots of good discussions. Of course, the Middle East was a big topic. This time last year, it was all about tariffs. We had a bit more, as I say, on the situation with the blockades in the Strait of Hormuz and the potential impact that has on trade flows, higher production costs because of, higher diesel prices. And that's so pertinent in a place like Australia, which is very much sort of mining driven and dependent, and where we've been seeing some of those big miners coming out, reporting their quarterly numbers in recent days, talking about that issue, with some of the higher production costs, as a knock-on effect of some of the things that we're seeing in the Middle East. So as usual, there's always something interesting to talk about. I'm sure when we reconvene next year, it'll be something different again. But if you weren't able to make it this year, we hope to see you next year. And so till then, thanks very much.